Unsold inventory of homes for sale has been on the rise all year. It hasn't turned the corner yet. Inventory rose across the country this week, but at a pretty light, less than 1% rate. There are some signs that inventory growth is slowing with newly lower mortgage rates and at the end of the summer. In the years before the pandemic, it would be totally normal for inventory to peak at the end of July or in August. Recently, unsold inventory would rise later in the year, especially in the last 2 years as the market slowed. Inventory climbed all the way to November. So I think we probably have another month or more of inventory growth, but that growth sure seems to be slowing. Slower growth of unsold homes on the market is a result of still few sellers on the supply side and stability on the demand side. So we've been in this extended period of weak or declining homebuyer demand, so that unsold supply of homes continues to build. If demand just stabilizes, maybe we're at the peak of the trend for the season. We're keeping on the lookout for these subtle shifts in the market because it has implications for home price appreciation and for home sales volumes for the year. There's nothing in the data that says 2024 is going to accelerate. So the most optimistic scenario really we're watching for is stability and maybe poised for finally some sales growth recovery in 2025. At Altos Research, we track every home for sale in the country every week. All the pricing, all the supply and demand, all the changes in that data, the sales, so that you can understand it before you hear it in the traditional headlines. I'm Mike Simonsen. I'm the president of Altos Research, and let's take a look at the details of the U.S. real estate market as of mid-August 2024. So there are now 698,000 single-family homes unsold on the market. That's up less than 1% for the week. That's the least growth in inventory in months. And this makes sense as it's late in the season. And as I mentioned, in the years before the pandemic, it would be very common for inventory to hit the year's peak in August or even July. But since 2020, we lost some of that seasonality in market behavior. I am very interested in the timing of this year's seasonal inventory peak. We are, in a slow market, so it's not a surprise that the unsold home supply is still growing. In each of the last 2 years, that unsold peak didn't hit until November because mortgage rates were rising late in the year. That causing buyers to be discouraged and the purchase volume to slow down. And so in the yearly inventory chart here, you can see that inventory surge happened in the two red lines there, 22 and 23, in September of those years, with mortgage rates surging at the same time. So maybe we're in the opposite scenario this year with mortgage rates falling in the second half of the year. So maybe we hit the inventory plateau earlier. The first step there is when the growth rate slows down. So that first, the slope of the chart has to flatten. The growth rate of unsold homes on the market has slowed from close to 2% weekly down to roughly 1% weekly. This week was under 1%. Available inventory of unsold single-family homes grew by about 5,000 homes, or 0.8% this week. I read that as stability, including a few consumers maybe responding to slightly cheaper mortgage payments. Not a lot of sellers feel the need to unload in this market. On the new listings side, we've covered the slow rate of sellers for 2 full years now. This week was no different with 67,000 new listings of single-family homes unsold. That's right where we expected it for the week. It's a few percent more sellers each week than a year ago. So in addition to the 67,000 unsold new listings, there were 14,000 new listings which went immediately into contract, the immediate sales. So that's 8.5% more sellers in total this year than the same week a year ago. 8.5% more sellers will cause inventory to grow. When you look at the new listings chart here, though, you can see that this year's dark line is aligned with 2022. It's a little elevated over 2023, which were the record low levels. But also, there's no sign of any big surge in sellers. So the most dire predictions about where the housing market is heading would require a huge surge in sellers. Even in states like Florida and Texas, which led inventory growth this year, probably plateaued. The unsold inventory in Florida actually ticked down this week. New listings in Florida are down, and indeed, there were fewer new sellers this week than in the same week of either of the last 2 years. Texas hasn't rolled over yet, but we're keeping an eye on it. Texas inventory grew by 1.5%, or a little faster than the national average for the week. So, not all signs are showing the plateau in unsold homes. Texas drives a lot of the country, so we'll see if my speculation comes through. There are 366,000 single-family homes in contract. So that's a fraction fewer than a week ago. It's basically unchanged from last year. There were 66,000 single-family homes newly pending this week, 66,000, plus another 13,000 new condos that went into contract. So 79,000 total sales started mid-August. Still very slow. It is aiming us at around that 4 million annual sales mark, and it hasn't really climbed notably. I've illustrated the total count of homes, single-family homes in contract here. This year's curve is the dark line. It'll dip again over the coming Labor Day holiday in a few weeks. It's taking about 36 days in contract on average for home sales to complete this summer. So these sales here will mostly complete in August and September. So as mortgage rates fall, we're still looking to see if there's any notable uptick in buyer demand. Nothing really apparent yet. Payments are still very expensive, of course, but they're basically at their lowest point for the year. So is there a threshold that motivates buyers? I previously assumed that being at 6.5% for the 30-year fixed mortgage would be a visible threshold for increased homebuyer demand. I haven't seen any visible confirmation that I'm right, though, in the last few weeks. Still looking for that. If we see any uptick in buyer demand, we're looking at September or even October before the sales needle moves. So it's really fourth quarter data that we're looking at now if we're going to see any sales data improve on a relative basis relative to the last 2 years. So in this data here, you'll see that you'd see that dark red, that dark line finally lift above the trend from last year. In both of the last 2 years, the two lighter red lines here, mortgage rates rose in the second half of the year. 22 and 23, those sales took a big hit late in the year. So maybe, if we're lucky, we see the opposite trend taking shape finally this year with a few more sales building up to have a better fourth quarter, if we're lucky. If we're not lucky, then rates haven't fallen far enough or buyers are just going to wait until next year before taking any action. So keep your eyes on the weekly pending sales data here. The median price of single-family homes in the U.S. is $449,900. That's unchanged from the last few weeks. If you walk into the housing market today to buy or sell a house, this is what the market looks like. It's the same median price as last year and in 2022 in August. The prices basically nationally haven't changed in 2 years. The price of the new listings this week is $400,000. That's roughly the same as last week and just fractionally above last year also. So I've used the long-term illustration of home prices here so you can see how the old normal steady increase over the last bunch of years has plateaued. Home prices are basically unchanged over the last 2 years, and in a world where mortgage rates stay relatively elevated, or if the economy finally slows, I anticipate we could have 2 more years in this same pattern. So in this chart, see how the annual summer home price peaks? Watch that to understand how the historical pattern works. Also note how clearly this chart illustrates the new listings prices and the seasonality in that number. That's the bright red line here. So home prices are at their lowest over New Year's holiday. Then in the spring, the best inventory comes to market and home prices are at a premium. That peaks in May. Then in the second half of the year, if you're listing for sale, you do so at a little discount to make sure the house moves before the holidays. At the right end of the chart, you can see this season's discounts are now in full swing, coming down like they have in each of the past 2 years. In 2021, right in the middle of the chart here, the late year demand during that pandemic boom kept prices buoyed. So you can see in August really how the home price appreciation was going to play out for the whole year. So the price of the new listings now is $400,000. That's just fractionally above last year at this time. These are leading indicators for future sales prices, and it tells us that the sales price measure you see in the headlines will finish the year flat, maybe just a little bit positive. The homes listed for sale now are priced basically where they were a year ago, so the sales prices will be around the same levels when those sales close later in the year. Now, it is notable that the price of the homes in contract are still 3 to 5% above last year, so at $399,900. This is unchanged for several weeks. Last year was the pending home sales was hovering around $380,000, so it's $399,000 now, and it was $380,000 a year ago. So the pending sales price are the best proxy for the sales that are about to happen. And right now, those sales are priced a little above last year. And that's why when you see the headline numbers of, about home sales prices, they're still reading a little higher than 2023. I don't imagine that the pending sales prices are going to improve from here. So I feel like there's only compression in the data through the end of the year. We're at 3 to 5% home price gains now. So we're looking in the 0 to 3, 3.5 by the end of the year. Price cuts on the homes listed for sale has maybe plateaued for a few weeks here at 39.5% of the listings that have taken price cuts from the original list price. Though I do expect price cuts to continue to grow as the summer turns into fall. As it gets later in the year, any seller who hasn't gotten the offer they wanted has two options. Either you cut your price or you withdraw the listing. In either way, the percentage of the active market with price cuts increases. So this should increase slowly the number of price cuts, the percentage in the next couple months. Withdrawals of active listings are definitely climbing. So this happens every year in every market, of course, but it's happening a little bit more now. So on the one hand, withdrawals are a bearish sign. There's no buyers, sellers are discouraged, so they're walking away. On the other hand, this illustrates that sellers can walk away. It's a signal that homeowners are not interested in a weak market and are in a good position to wait. This implies continued tight inventory, or a bit of cap on inventory growth, and it implies less downward pressure on home prices, even in a time of weak demand. If mortgage rates continue to fall and a few more buyers are motivated, then we'll see this price reductions data top out in the next few months before beginning to decline for the fall. If we're unlucky and rates bounce back up, for example, if the Fed doesn't cut rates as expected in September, then the mortgage markets would react sharply and mortgage rates could jump in September, and then we'd see a big jump in the price reductions line the same way it happened in both September 23 and 22. That could happen again, so keep watch here. And that's why we do this data work each week. If sellers finally change their expectations, we'll see it in the data quickly. Mortgage rates have stayed higher for longer than anyone anticipated this year, but maybe we're finally turning the corner if we're lucky. For buyers and sellers, these conditions can change quickly. They need to hear the data from you so they know how to act. So you should join us at Altos Research. Go to altosresearch.com and book a free consult with our team. We'll help you know how to talk about the data and your local market data to your buyers and sellers today. There's a link in the description below to join us. Click that and let's get started.